It's the Impeccable Investor here, and I just want to say thank you so much for claiming your free investing checklist PDF. Why? Well, it's because you're showing that you are a person who is going to pursue the best stocks, who wants to get the best information, and who wants to make a better future for themselves by learning the best stocks to pick. So I just wanted to personally say from your inner self, thank you so much for getting this checklist. I'm going to go over the 3 checklists in here and explain every single term you need to know and where to find all this information in a simple way. Also, if you do not follow me on YouTube, you can click this YouTube logo right here and it'll send you right to there. If you don't visit my blog often, you can click here and go there as well. You can also click here to visit the Instagram as well. All right, now I'm going to break down each individual checklist from the buy and hold to the dividend to the trend investing checklist. So let's start going through the terms. Starting off is the buy and hold investing checklist. So first off, can anyone understand the company? This is a crucial question because you want to make sure that investors understand what the company is able to do. You can't invest in something if you don't understand what's happening. Second, does the business values reflect your values? This is a personal transaction. You want to make sure that the company you are investing in has your best interest at heart. If you support something, you want to make sure that they support that as well. Third, is the stock in a long-term uptrend? I'm going to show you how to classify this in a second, but you want to make sure that the stock is increasing in price over time so that you are, in fact, going to make money. Fourth, does it have a high profit margin? High profit margin is the amount of money that a company gets to keep after every sale. So after cost, after taxes, after everything, what is the profit margin? How much do they get to keep? Next, does it have a high EBITDA margin? That's a fun word to say, EBITDA. EBITDA margin. That means E stands for earnings before interest, taxes, depreciation, and amortization. Meaning, what is the earnings they get before all the costs, before all the taxes, before the mandatory stuff that comes off? What is their profit margin? This makes it something easy to compare to other companies, which I will be showing you how to do in a second. Next, does it have a low debt to equity ratio? What does that mean? It means, does it have more cash, more money than it has debt? If you want a company to survive long term, which is what a buy and hold investing strategy wants, then you want to make sure that the debt is lower than the equity. You want to make sure the company has a lot of cash, has a lot of money, and lower on the debt side. Next, does it have a high return on equity? That means the money that it does have, is it able to produce a return from that? AKA, will this stock be able to make money on its own money? That is another crucial factor. You want the stock, the company, to be able to make its own money from its money. If it can't make money, then there's no point in this stock continuing to be around because the company is just going to fail. You also want a high return on assets. That's the next one. Does it have a high return on assets? Meaning all the assets that it has. Cash, it has other assets such as you have tangible and intangible, and you can break that down even further, but that's shown on the balance sheet and I will show you exactly where to find that. Does it have a high return on assets? Meaning, does it make money from its assets? Next, is there a positive EPS growth? EPS stands for earnings per share. So earnings per share means that it is the number of earnings divided by the number of shares outstanding so that you can see each shareholder, for owning one share, how much of the earnings do I actually get? Because as owning a stock, you're actually a part owner of the company. Being a part owner of the company, you are entitled to the earnings of the company. So EPS shows you the amount of earnings you see as an investor. Are stock buybacks common? That's a really good one. Stock buybacks means that the company, insiders, people like the CEO, the boss, are they buying more of the stock? If a company is not buying more of their stock, that means that they simply don't believe in the company. You want them to be buying more, showing that they believe the company will do well. And lastly, do you see yourself holding this stock for 10 years? Remember, this is a buy and hold investing strategy. You're buying to hold this for the future. Now, let me show you exactly where you can find all these resources. If you go here, research.tradeking.com, you can view all the resources and statistics of every single stock you want by simply putting in the quote here. So the first thing we're going to do first is go to the charts tab. We're going to go to the max. This is how you determine if it's in a long-term uptrend. You can see here where price started. Is it over time continuing up? You want the stock, like this, for instance, is Coca-Cola. Do you want Coca-Cola to go up in value? Remember, if the stock started around 50 and throughout its whole lifetime it slowly started to move back down to $10, that means that the stock has a history of going down in value. You want the stock to have a history to go up in value so that you make money. Now, to understand the fundamental questions that we posed, you also have the stuff here. So we first posed the net profit margin. So the net profit margin here is 22.10%. Now, when we compare that to the industry average, other companies that are making the same products as Coca-Cola, what is their range? Well, you can see here the highest is 26%. That means that Coca-Cola, their net profit margin is of the highest of the industry. That is a great thing to see. That is a clue that, hey, this is going to be a great stock. The EBITDA, again, I love that word. The EBITDA margin is 32.67%, which is one of the highest in the industry. That's second of how crucial this will be. You also have return on equity here of 43%, return on assets of 25%, both of which are the highest in its industry. Those are some amazing things we have to look out for. This is where you can find the EPS growth annual, and it shows how much the earnings is growing. This is the website where you will find all the financing. Now we're going to cover the dividend investing checklist. Now it's time for the dividend investing checklist. As we just covered a second ago, we discussed all these features here, where to find them, which is on this tab here, which is research.tradeking.com. But now we're going to focus on what is the company's dividend doing. We're going to apply less of a focus on the company and more of on the dividend, because that's what dividend investing is. So a dividend yield you like. Now, a dividend yield you like could be anything. Do you want more of a dividend yield, or do you want less of a dividend yield? So we can go back here, which I will show you after we cover the rest of these questions, and we can talk about how to find it and what's actually important. So next, does it consistently increase its dividends? Now that is another crucial question. Is it increasing its dividends? Which means, do you want the stock to increase the amount it's paying you? Remember, a dividend is how much a company pays you for owning the company. So if this stock has consistently increase its dividend, that means it's going to continue to pay you more and more and more over the years just for holding this stock. Next, does it have a low payout ratio? Which means that is the money it's paying you in a dividend not the whole net income? You don't want it to be the whole income, because you want the company to be able to have some money to reinvest and thus make the company bigger and better. And lastly, do you see yourself holding this stock for 10 years? Now, when we go to the research.tradeking.com, we can see here that this is the earnings and dividends stuff. So we can see here that it gives us the dividend yield 5-year average, which is a 3.17%. Now that is a great dividend return. Even the 3.29, which it currently is a great return. So is that a yield I like? Yes, it is. Remember, the average is going to be in between 1% and 4%. Anything above that is probably going to be a REIT. Now the current payout ratio is this. It's 196. It's pretty high. So if you can see here, compared to the industry average, it's one of the highest in the industry average, meaning that it's paying out a lot of its money through dividends. So you might want to look into a stock that's less than, or considering that all the other factors of the stock has been so great, you can overlook this. Now remember, Coca-Cola is a stock that has been increasing its dividend for over 50 years, thus giving it the classification of a dividend king. All right, guys, that is how we look at dividend investing checklist. You want to make sure the dividend's increasing, you want to make sure it's a yield you like, and you want to make sure the payout is pretty low. Now we're going to move on to trend investing. The last part of this checklist is trend investing. Now, for those of y'all who don't know what trend investing is simply a long-term swing trading approach where you're putting your money in a stock during the point at which the stock increases in price and makes you money, and then taking your money out of that stock when it stops making you money, aka when it stops being in an uptrend. Because in a market, it goes up, down, up, down, up, down as it continually increases in price. But as trend investors, you're looking to just put your money in the market as it's increasing in value. So we covered these in the previous portion. Now that I'm looking back over it, we actually never covered what stock buybacks are. I'm so sorry about that. Let's go through that right now. So if you can see here, if you go to the insiders tab of this, you can see what the insiders are. So we can go here and we can go to time frame. We can go to max. We can click view and we can see the max history that it will show us. So green shows when insiders of the company are actually buying back their stock. So if you can see here, they bought back around 32 something thousand shares back. They bought a lot of shares here, shares here, shares here, shares here. That means for Coca-Cola, stock buybacks are common, which means the company believes that the stock price will increase over time, so they are going to buy more shares, thus making them money. Remember, owners and insiders of the company are business people. They're not going to invest in a stock simply so they lose money. If they are investing in the company themselves, that's showing they believe the company will make money. Now, going back to trend investing, if you can see here, above the 200-day moving average. So you're looking for this line. If you go to any website, whether it be Yahoo Finance, TradingView.com, or your brokerage platform, you're going to be able to put in a moving average and you're going to be able to set that length to 200. It's going to be a line that shows you the average of the past 200 days. So it's going to take the average price of the past 200 days and give you a value for that day. If it's above that value, or if it's above that line, then it's going to show that the stock is in an uptrend. The stock is making value. The stock is increasing in value. That is what you want to buy in. You want to buy into a stock that's above the 200-day moving average because it shows it's trending to the upside. Now, second, trending well above the 200-day moving average. Look back in the past history of the stock. Is it trending above that 200-day moving average well? When it gets above it, does it trend well? Those are some crucial things that we're going to discuss and I will show you soon. Is it in a hot sector that is performing well? For instance, currently AT&T, we knew the 5G sector was going to be huge. Whether you dislike it for the health effects or not, there's a lot of things happening on 5G that are inevitably going to happen. It will happen. So we know that AT&T would have been a great buy because it's in a hot sector. Therefore, it's going to make us some money when it starts to grow. And do you see yourself holding the stock for a year? Because on average, on a trend investing approach, you're going to be looking to hold each stock for about a year. All right, now I'm going to break down exactly how you can look at this in the chart, and then we're going to be over with this quick, brief video. Thank you so much for tuning in. Those of y'all who watch for the buy and hold and dividend, if you're not interested in trend, it's okay if you leave the video now. Now I'm going to break down exactly how you can look at the stock and do the trend investing and validate those checklist points on the trend investing checklist. So if you can see here, this is TradingView.com. You don't have to make an account. It is completely free. And we can go up here and type in Coca-Cola because that is the stock that we have been using for the past other checklists. So I want to stick with it. We can go here, and because you don't have if you have a free account, you have to be subjected to these ads, but you can come here, not comparing, you can come here to the indicator section and type in moving average. And then you just type in a moving average. You want to come here to the settings. And then, like we said, we're going to be using the 200 moving average. So just like that, on the daily chart, which shows the day, we have seen the moving average. This is that moving average line. When you invest in the stock, when it's above this line, you're investing in it as it makes money and grows. When it's under the line, it tends to not make money. Now, this is an example where this stock necessarily wouldn't meet that checklist point of does it trend well above the 200-day moving average, which is this line. Why? Because you can see how it goes up and down underneath it a lot. A great stock we could look at would be, for example, AMT. You can see here when AMT or American Tower Corporation gets above the 200-day moving average, the stock price increases tremendously. You can see here as we zoom in, when it increased in price above here, when it got above the 200-day moving average, it actually increased in value 26%. So this was about 1 year average. Like I said, the average trend investing hold is for about 1 year. So you would have made 26% just this year in trading above the 200-day moving average on AMT, as well as all the other times you could have done it. For instance, here when it crossed above, almost a 30% gain, but that was around 2 years. So you can see here how you can use trend investing to your advantage to beat the market. All right, guys, thank you so much for tuning in. And I want to thank you once again for getting this free investing checklist and investing in your future. If you made it all the way to the end, please DM me on Instagram and say, hey, I made it to the end of the video and I've loved the content. And if you haven't, please give me some ways to improve. All right, guys, once again, thank you so much for getting the checklist, and I hope this helps your future.